Of behavior into the bottom print here, this little divergence here was a little bit interesting, wasn't it? So what that tells me is they're unwinding some of their hedge positions, and what they're doing is adjusting in the actual price of volatility at this point. That means that they're, whilst they might be bearish, they're not as bearish as they were, because if they were really bearish, the hedge would still be in place, just like it was at this top edge here, when we got that very, very nice opportunity to sell back into that print at the highs here. And that was obviously the simplest trade we had today, was that sell trade up here. And that's what seems to be happening at the bottom edge. We seem to be getting the adjustments made in volatility, but not in the need for the dealers to hedge out their volatilities. They're just adjusting the volatilities just now and taking it onto their books, yeah. So, yeah, that's the way it's at the moment, guys. That's the way it's at the moment. We did have a max trigger at the bottom edge there. It's just went into a buy trade, and it's just started to make us a few $1,000s profit. That's okay. We'll take that little bit of profit there. So you'll see the max trigger came in here. We came down into the low price. Max left it behind, and that gave us our buy trigger right there. And with the buy trigger at that price, there's the bottom tick. It takes it out by one single tick, guys. One single tick on that trade, and into a buy trade there at 2.5. and a rally up to 6.5 on the buy trigger there. So that was a good max buy trade, very good max buy trade there. Very, very easy to make a quick buck, and money's banked and spent basically. Money's banked and spent, especially at this time of year.